the main reason why investing in Japan is really to acknowledge what has been happening since Abe took power in 2012. We clearly have a game change in terms of GDP growth, which is again positive. We also have inflation that is coming back, bringing an end to the deflationary period that we've seen the last 2 decades. So I think that's the major elements that investors should bear in mind. On the top of that, obviously, we have domestic consumption, which is resuming, which is very positive. So consumers are again confident to consume because they think that the price of goods will no longer fall, but to the contrary will increase. So that's a good trigger to also restart, I would say, the second engine for the Japanese economy, which is domestic consumption, not only relying on exports. The third element is really the earnings momentum, which continues to be good. And I think that's not everywhere the case, but it's been very stable in Japan the past few years. And it's also thanks to the changes in the economy around Japan, in emerging Asia, but also in the US and Europe. But also thanks to the way we communicate, the need for technology, robotization, and all different goods that Japanese companies are still the best at producing, designing, and distributing. Another element which is favorable for Japan is the political stability. And we've seen a very big change with Abe, now in power since 2012. He just recently won the election, so he will stay at the top of the government for another 3 years. And I think that was exactly what Japan needed to start reforming different elements, not only in the economy, but also in the corporate governance, but we'll talk about it later. And lastly, I think what's also very compelling for investors is valuation. Japan is very cheap. It's probably abnormally cheap compared to the quality of the business that you can find in Japan. So that also gives investors a very good entry point. So yes, the value growth pendulum has very much been swinging in favor of growth for a number of years now. I think it has a lot to do with the fact that the price of money or the cost of capital was very low for a very long time. We had negative rates now since 2016. We also had a very nice boom in all the robotic stocks, all the high-tech stocks, which were very much in favor, not only in Japan, but also in the US and Europe, where we see the same long-lasting growth rally. What has changed in Japan this summer is really the stance of the BOJ towards the yield curve management. I think they've came with a very, not a mild speech, but a more aggressive stance on the quality of growth of the economy and also the robustness of the GDP growth. So we can see now that there is a little bit of a turnaround between value and growth. We already started to see that with financials that have come back into favor. And we've also seen that some of the ridiculous valuation in some very high growth sectors and stocks have also started to decline. People are realizing that you cannot pay 50, 70 times for companies that have not foreseeable cash flow, potentially disruption in their business. So for us, value is clearly our philosophy. So we will have a natural bias towards value. But we also think that Japan is often a market where people come in and out very rapidly. It's a high beta play for many foreign investors. Bear in mind that more than 60% of the daily volume of the Tokyo Stock Exchange is the result of foreigners coming in. So it's another element we like is the fact that those in and outs often create some inefficiencies in the market where value investors can very much benefit from that. So we think the pendulum is again swinging in favor of value, and also the fact that this year has been a bear market for Japanese equities is creating even more compelling investment cases for value investors. ESG is starting to get traction in Japan. I think Japan has been very slow at reacting to all the ESG problematic. I think this is probably something that emerged in Europe and is now getting traction around the world. But Japan was probably the last country, let's say, within the developed countries to acknowledge the importance of ESG. What has changed in Japan is really the policy of the big state-owned pension funds that are now investing more into equities for obvious reasons. When you have yield near zero, you cannot meet your liabilities. So the reason and the decision of the GPIF to increase equities could not be done if corporate governance was improving at the same time. how come a country can rely on equity to fund its retired employees if at the same time companies are not rewarding shareholders in a good manner? So this is really a big game change in Japan. It will take time to develop and to spread in all sectors. But what we can see so far, we can see different things. First, they are launching indices that are ESG friendly, and those indices are now used by big pension funds. Second, they are empowering more external independent board members in their board, which is very positive in Japan, because that will enhance the need for decisions that are in favor of minority shareholders. Third, the decision was taken also to increase return on equity, and to increase return on equity for investors is something that will close the gap between Japanese equities and some of the other developed markets. We also see that women, the participation of women in labor force is increasing. It's the result, of course, of some demographics, but it's also the acknowledgement of a workforce that was untapped and that could create some good momentum. So we see emerging and blossoming little elements about ESG almost everywhere. So you're right, yeah, Abenomics has been a key word since 2012. Sometimes it has been a little bit overlooked. Of course, reform take a lot of time to become actual, become real. But what we've seen is that he's pursuing the same target that he has in terms of raising the value-added tax. So we had the first increase a couple of years ago from 5% to 8%. The delay to move into the second phase from 8 to 10 is now coming to an end. So we will have this additional 2% put in place at the end of next year. And I think it's very positive news in terms of how people are backing Abe in his intention to bring back or to better balance the budget of the country. So without having a higher added value tax, it will be very difficult for Japan going forward. So it's a necessary need, it's painful, but without people backing the government and keep on consuming like they've been doing for the last couple of years, it wouldn't be possible. So it's a risk they take, but I think at the same time, they will be also having some stimulus. So we are expecting a big package of more than 10 trillion yen, just also to balance a little bit the impact of this increase in added value tax. Japan is too often a high beta play. I'm not sure it's well deserved. I think it's a country which has its own merits in terms of growth, and we see that now more and more. But clearly, when we had some risk off during the first half of this year, Japan was penalized, and that's clearly something that we observed. It's also a market that did quite well the last 5 years, so there is probably some profit taking that was at play. In addition, we've seen also a little bit of a decrease of the bubble in some very high growth tech companies. So Japan hosting some of the best robotic companies was also impacted, probably unduly, but we see that as probably something a little bit more healthy for the future. In addition, we have the trade war signals coming from Trump with the Chinese. So Japan, being a high exporting country, was clearly impacted, even if nothing has been enforced in terms of barriers that might be heightened for Japanese goods to enter the US. But the news only had a very negative impact on Japan during the course of summer. We see that as short-lived. We think that probably the Japanese have a good card to play in the triangulation between US, China, and Japan. So our case is that US have no intention to impose more on Japan, and that's probably something that adds to the very compelling case for Japanese equities being cheaper today for reasons that will not materialize in the future. For us, the outlook is rather positive for Japan for all the reasons that we mentioned: stable governments, a compelling valuation, but earnings growth, which is still there. There's still good momentum. I think Japan, we often forget, but it's still the third largest economy in the world. It sits in the heart of Asia, which is the fastest growing region in the world. When we look at valuation, it's very compelling. Look at how high Japanese equities have been trading the last 5 years, around 14 times. Today we trade at 12 times. So even if we go back to, let's say, the normal trend we've seen the last 5 years, 14 times, it still represents a nice upside for investors. We also see something very interesting from the currency standpoint. So very often we have a correlation between the market, which is moving up, and the yen, which is becoming weaker. So you better edge yourself if you are in this scenario. But this year we've seen a decoupling between the US dollar and the Japanese yen. So what we observe is that investors are no longer relying on the yen movement to bet on getting in or out Japanese equities. To the contrary, Japanese equities have been able to gain some traction on the basis of their own merits, and we think that's something quite compelling. So we remain positive on Japanese equities. There is probably a PE expansion that we see. Earnings still good, probably high single digit for 2019. Yen should remain stable, so we don't expect the yen to weaken further, neither to strengthen a lot. And again, I think Japanese corporates, many of them have a good role to play in the new millennials consumption patterns.